Good afternoon, everyone. It's definitely been a very busy few days in the market with the ECB press conference meeting after their rate decision on Thursday, non-farm payrolls on Friday. Today we had the Bundesbank voting on whether to ratify the ESM bond plan, which went through, and on Thursday, which is tomorrow, we're going to have the meeting at the Fed and basically whether we're going to have more QE or not. So this has definitely provided a lot of volatility to the market, and we've been having quite a wild ride in the Bund, the currencies, stocks. Spreads stayed pretty much stable, but still slight upward bias. And I'm just going to go straight to the technicals and looking at the Bund right now. And if we look right here, just a couple of weeks ago we were trading 142.55 just before the rollover, and then we've been steadily coming off, and then the downward pace gathered momentum coming into the ECB press conference as a lot of murmurings and leaked info was sort of pretty much gave away that there was going to be bond buying from the ECB should any countries take it up. And then when we got that announcement, we pretty much continued to move down in the Bund, and we breached 140 and got into the 139s, which has been a long time since that's been coming. But then we bounced off 139.46 on Friday on the back of a weak non-farm payroll number, and given that ADP was strong, this came as quite a bit of a shock, and it led to about 120 point rally in the Bund, and we double topped almost at 141, and now we've come back down again as the Bundesbank has ratified the ECB bond program, which led to another big sell-off in the Bund, and now we're trading back in the 139s, around 139.60. Now I said we sort of had a good bounce off yesterday, Thursday's low at 139.46, and we sort of pretty much went up about 40 points on the back of that, but then we retested it again and pushed back below. Now I still maintain that I can't see how much lower this is going to go, considering that there's no real rate setting policy in action. So we might touch 138s, but I still think that the longer term horizon for this is the Bund goes upwards, because although this is a short term fix, fundamentals are still not there. The economies are still all struggling. The US is struggling too, which was the one market that was pushing things up. So things are far from rosy yet. So I still think long term, medium to long term, we're still pushing up in this Bund right now. And so as you can see, on a technical level, we sort of formed the head and shoulders pattern, and then we broke the neckline over here, 140.15, and then we had a pretty big move down, and now we're pushing up. So looking at this on the Fibonacci retrace, again, the levels that I'll be looking out for is 140.51, 140.83, and where we double topped at 140.97. So those are the intermediate targets that I'm looking for, and towards the downside, pretty much you can go for today's low, which was 139.24, but then after that, just quite a lot of open air. But again, I don't think we're going to really push it that much. And if we look at the spread and look at how the yield curve been doing it by looking at the Shatz Bund, as you can see, as you would expect, it's pretty much an inverse of the Bund move. And as you can see, this is the move down in the Bund, this is the move up in the spread, and then this is the inverse head and shoulders, and then this is the break of the neckline, and then we've had a move up. So to see how correlated it really is, or how much the Bund is leading this, we can see that 302.49 was the neckline level that we had, and then the high that we got to was 303.20, so that's about a 70 pip move. On the Bund, basically we went from 15 to 24, so that's a 90 point move. So pretty much the spread is still fully being led by the Bund, and the Shatz is not really having much of a bearing on the actual spread. So again, it's, like I've said plenty of times before, it's just to hedge outright this spread. And you know, as you can see, looking back, this is the drop down in the spread that we had in the yield as we had the move up in the Bund initially from over here. So looking forward again with this spread, I expect there to be some type of flattening, because we've had a pretty big move to the upside, and you know, from 388 to 303.20, which is about a 250 point move, which is quite a bit, with no real movement in rates anywhere down the line. So this is what I'd be looking to play this to the downside in that spread if I was going to do it. Looking just at the Euribors, if we look at that, if we look at the Euribors right here, as you can see, this is a 120-minute chart of the March 14, June 14 spread, and as you can see, you know, we've been just trading a nice range really. You know, the initial range really was between 6 and 8, and this is the range that I've been playing for a long time, even before before we had the move up, and then we broke out. But with rates the way they are, any type of breakout, I'm always selling into it. After selling 8s, 8.5s, 9s, you know, just managed to scratch it and make small profit as the retrace happened. And again, we came back into that 6 to 8 range in this spread, and now we're sort of threatening to break above it again. But again, if we do, I'll be looking to sell it all the way back down again. So that is the current way that I'm sort of playing all these spreads. Anytime they're reaching the top of a range or anything like that, or if they break a range, I'm just looking to fade into it. And it's pretty much the same story along the whole curve, where pretty much the same type of action is sort of happening. But the thing is that even though it's a bit slow, it's giving you opportunities to get out, even though it might take you a bit of time to get out. For that way it's working quite well. But again, the volatility still hasn't come back that much to these Euribors, especially the volume relative to the other contracts, so it's not been as easy to play them, but there's definitely signs that it is coming back, which is a good thing. Well, all eyes now are on tomorrow, and looking at that, whether or not more QE will take place. The market's pretty much pricing in. With the bad number last week, we're going to have a new bout of QE3, but how effective it will be, that's the question. But it will be interesting to see how that goes then. Until then, good luck with your trading.